Hey everyone, and welcome back to Investing Talk Podcast. Today, we're going to be taking a look at Sandstorm Gold. They're a gold royalty company, trading under the ticker symbol SAND. Now, I know what you're thinking, another gold company, but trust me on this one, there's some buzz around this company, especially after their Q4 2024 performance. We're talking dividends, share buybacks, and ambitious production targets. So stick with us while we break it all down. Does Sandstorm Gold deserve a place in your portfolio? Well, let's first start by unpacking their Q4 2024 performance. Sandstorm Gold sold around 17,700 attributable gold equivalent ounces, and they pulled in a preliminary revenue of $47.4 million. I'm curious what stands out to you in those numbers.
Well, those are pretty impressive figures on their own. But what's really interesting is how those numbers translate to their profitability. Their cash operating margin for Q4 was $2,397 per attributable gold equivalent ounce. To put that into perspective, that's a significant jump from the $737 they reported in Q4 2023.
So they're not just selling more gold, they're becoming more efficient at turning it into profit.
Exactly. And that increase in cash operating margin is a major signal to investors. It suggests that Sandstorm Gold is running a tight ship. They're keeping their costs under control while maximizing their output. This type of performance makes the company much more attractive from an investment standpoint.
Makes sense. Now let's talk about the recent announcement that Sandstorm Gold will be paying a dividend of $2 per common share. What does this tell us about their financial health?
A dividend announcement is usually a positive sign. It indicates that a company is confident in its ability to generate consistent cash flow and is willing to share a portion of its profits directly with its shareholders. In Sandstorm Gold's case, this dividend could be particularly attractive to investors who are seeking passive income.
But it's not just dividends, right? They're also buying back shares through their automatic share purchase plan, or ASPP, as part of their normal course issuer bid. Or NCIB, why would a company choose to do that?
Share buyback programs can be a strategic move for companies, especially those who believe their shares are currently undervalued, by buying back their own shares. Sandstorm Gold essentially reduces the number of shares available in the market. This, in turn, can potentially boost the value of the remaining shares. It's like they're saying, we believe in our company so much we're willing to invest in ourselves.
That's a bold statement. But there must be some risks associated with share buybacks, right?
Of course. One of the main risks is that the company could be using funds for share buybacks. That could be better allocated elsewhere, such as investing in new projects or research and development. It's crucial to look at a company's overall financial health and strategy when evaluating their share buyback program.
Now, shifting gears to Sandstorm Gold's production goals. They're targeting 70,000 to 75,000 attributable gold equivalent ounces for 2024, with a 5-year goal of 125,000 ounces. Do you think those targets are achievable, given the current landscape of the gold mining industry?
The gold mining industry is a complex beast, influenced by factors like global demand, geopolitical events, and, of course, the actual availability of gold deposits. Achieving these targets will depend on Sandstorm Gold's ability to navigate these challenges effectively.
It sounds like a lot hinges on their operational efficiency.
Absolutely. If they can continue to optimize their existing projects, bring new projects online smoothly, and make strategic acquisitions, hitting those targets could be within reach.
It's interesting, right? They seem to be doing so well, but there's this underlying uncertainty that comes with any company operating in the gold mining sector.
You hit the nail on the head. The gold market can be incredibly volatile. It's influenced by a web of economic and geopolitical factors that can shift quickly. That volatility can make it difficult to predict long-term performance.
Right. Speaking of predictions, there's been quite a bit of chatter about Sandstorm Gold's stock price. H.C. Wainwright, for example, set a price target of $12, which is pretty optimistic. The average target from Wall Street analysts sits around $8.50. While longer-term forecasts suggest a slight decline to 5.403 cents over the next 5 years. It seems like a mixed bag of opinions. How do we make sense of these varying viewpoints?
This is where we have to remember that analyst predictions are just one piece of the puzzle. They're educated guesses, informed by data and market trends, but they're not guarantees.
So we shouldn't take those predictions as gospel, but use them as a starting point for our own research.
Exactly. You always need to consider your own risk tolerance, investment goals, and conduct thorough research before making any decisions.
And it's not just analyst opinions we need to consider, right? There's also technical analysis. For instance, Sandstorm Gold stock gained 3.13% on January 30th, showing some positive momentum. It's currently trading above its key moving averages. What can you tell us about these indicators?
Moving averages are essentially trend lines. That helps smooth out price fluctuations over a given period. When a stock is trading above its moving averages, as Sandstorm Gold is right now, it can signal potential upward movement.
So does that mean now is a good time to buy?
Not necessarily. While the short-term indicators might look promising, it's crucial to remember that stock markets are inherently unpredictable. There are always factors that could cause a shift in momentum.
You're right. It's all about balancing the potential rewards with the inherent risks.
Exactly. And there's one more important indicator to consider: support and resistance levels. These act like floors and ceilings for a stock price. Sandstorm Gold is currently trading closer to its resistance level, which could be a sign of potential gains.
So positive momentum, trading above key moving averages, and approaching its resistance level. It sounds like things are looking pretty good for Sandstorm Gold, wouldn't you say?
They're certainly showing signs of strength, but remember, every investment carries risk.
Always a good reminder. We'll dive deeper into those risks and what to watch for when we come back. Stay with us, folks.
That's right. We need to consider the whole picture. One of the key risks with Sandstorm Gold, like any company in the gold mining sector, is the inherent volatility of gold prices.
But help us understand that. What drives those price swings in gold?
Well, gold is considered a safe haven asset. When economic uncertainty or geopolitical tensions rise, investors tend to flock to gold, driving up its price. But when things calm down, demand can drop, and so does the price.
So even if Sandstorm Gold is performing well operationally, external factors can still significantly impact their bottom line.
Precisely. Now couple that with the fact that Sandstorm doesn't directly mine gold. They operate as a royalty company, meaning they provide upfront financing to mining companies in exchange for a percentage of future gold production.
So their success is tied to the success of those other mining operations.
Exactly. It's crucial to look at the specific mines in Sandstorm Gold's portfolio, their production levels, their costs, and their overall outlook. Which assets are performing well and which are lagging? Are there any upcoming projects that look particularly promising?
That's a great point. Just because they're in the gold business doesn't mean all their assets are created equal. We need to understand the strengths and weaknesses of their portfolio.
Absolutely. You also need to consider the potential risks associated with each mining project. Things like political instability in the region, environmental regulations, or even just plain old bad luck with exploration can all impact a mine's profitability.
It's a lot to consider, but it sounds like a smart investor should go beyond just looking at Sandstorm Gold's overall performance and really delve into the specifics of their royalty agreements.
Couldn't agree more. And let's not forget, Sandstorm Gold is scheduled to release their Q4 2024 and annual results on February 18th, 2025. That will give us a much clearer picture of their financial health and how they're tracking against their production targets.
It's like we're getting a progress report on how well they're navigating all those potential risks we just discussed.
Exactly. It will also be interesting to see how they're managing their debt levels and what their plans are for future investments and acquisitions.
Okay, so we've covered a lot of ground here. Impressive financials, intriguing share buyback program, ambitious production targets, but also the inherent volatility of gold prices and the unique risks that come with being a royalty company. It's a lot to weigh.
It definitely is, but that's what makes investing so fascinating, right? You're constantly evaluating, analyzing, and trying to make informed decisions based on the available information.
It's like piecing together a puzzle, and each piece contributes to the bigger picture. But with so much information out there, where should someone even start?
I always recommend investors begin with a company's official filings and financial statements. Look at their revenue, their profits, their debt levels, and their cash flow. Then delve into their business model and their specific operations. In Sandstorm's case, that means understanding their royalty agreements and the mines they're invested in.
Makes sense. Get a solid grasp of the fundamentals first.
Exactly. Then you can start to look at analyst reports, news articles, and technical analysis to get a broader perspective. But remember, always be critical of the information you encounter. Don't just accept things at face value.
You're reminding us to think for ourselves and not just blindly follow someone else's recommendations.
Precisely. It's your money, and your investment decisions should reflect your individual goals and risk tolerance.
So to wrap things up, it seems like Sandstorm Gold is a company with a lot of potential, but also some inherent risks. Their strong financial performance and ambitious goals are certainly enticing, but investors need to be aware of the volatility of the gold market and the unique challenges that come with being a royalty company.
Exactly. It's a complex equation with a lot of moving parts.
And on that note, I have a question for you. and for our listeners to ponder. We've talked a lot about Sandstorm's current performance and the various factors that could impact their future. But here's something to think about. What role could technological advancements play in the gold mining industry, and how might that affect Sandstorm Gold's long-term prospects?
That's a fantastic question, and one that I think a lot of investors overlook. The gold mining industry, like many others, is on the brink of a technological revolution. Innovations in automation, data analytics, and exploration techniques have the potential to significantly disrupt traditional mining practices.
So it's not just about digging up gold anymore. It's about doing it smarter and more efficiently.
Exactly. Companies that can effectively leverage these advancements could gain a significant competitive advantage. They might be able to reduce costs, increase production levels, and even discover new gold deposits that were previously inaccessible.
So for a company like Sandstorm Gold, which relies on the success of other mining operations, those advancements could be a game changer.
Absolutely. Imagine a scenario where their partner mining companies are able to increase their output by 20% or 30% simply by implementing new technologies that would have a direct impact on Sandstorm Gold's royalty earnings.
That's a compelling thought. It's like a ripple effect, where advancements in one part of the industry can benefit companies throughout the entire value chain.
Precisely, and it's something investors should be paying close attention to when you're evaluating a company like Sandstorm Gold. Don't just look at their current financials. Consider their potential for future growth and how they're positioning themselves to capitalize on these emerging technologies.
It's a reminder that investing is about looking forward, not just backward.
You gotta, it's about anticipating trends, identifying potential opportunities, and understanding how a company's strategy aligns with those trends.
Well said. So while we've covered a lot of ground today, we've also uncovered a lot of new questions to ponder. Is Sandstorm Gold a smart investment? That's for each listener to decide based on their own research and risk tolerance. But one thing's for sure, this is a company with a lot of potential operating in an industry that's ripe for disruption. And that makes for a very exciting investment landscape. Thanks for joining us today on Investing Talk Podcast for this look into Sandstorm Gold trading on the SAND ticker symbol. We hope you found this episode informative and insightful. As always, remember to do your own research and consult with a financial advisor before making any investment decisions. If you enjoyed this episode, please subscribe to Investing Talk Podcast, share it with your friends, and leave a comment below. We'd love to hear your thoughts on Sandstorm Gold or any other companies you'd like us to discuss in future episodes. Until next time, happy investing.